Hey everyone, today I just wanted to discuss with you why I moved all my money from a traditional savings account into a Wealthfront cash account. I'm sure it's no surprise to you guys that your typical savings account doesn't really accrue much interest throughout the year. So that's why I moved all my money out of that and moved it to the Wealthfront account. The typical APY of a savings account is about 0.09% according to Value Penguin. But currently, the Wealthfront account's bringing 0.82% APY, which is annual percent yield. So it's a no-brainer for me to move my cash. The first thing you need to know is you gotta subscribe and like this video. So the Wealthfront APY doesn't stay the same. It actually fluctuates. Not too long ago, it was at 2.51 APY. And now it's at 1.82 APY. So like anything else I do, I did a lot of research before putting my money into this Wealthfront cash account. So what I found out was the rate is depending on the federal funds rate. So you may be wondering, what is the federal funds rate? So the federal funds rate is the rate set by the Federal Reserve, which is not part of the US, by the way. It's set to control if there's a large influx of money, then the rate goes down, and vice versa. So if there's a decrease in money, rates go up. With Wealthfront, there are zero fees and there's unlimited withdrawals and transfers from your Wealthfront account to your standard checking account. So here's something that just blew my mind about the Wealthfront account. So a typical checking savings account is insured up to $250,000 through FDIC. And with this Wealthfront account, it's up to $1 million. It's like quadruple what a regular checking is. So like with everything else, I had to go do a little research and see how in the heck they can do this. So after seeing how they do it, it looks like they just partnered with multiple banks to be able to pull this off. So I don't know how that works, but evidently it does. Some of you guys may not know what FDIC is. It's Federal Deposit Insurance Corporation. And it was created back in the 1930s during the Great Depression because a lot of people lost faith in the banking system in America. So the government said, hey, if you lose up to a certain amount of money, we'll step in and replenish that money for you. And no, the FDIC doesn't cover if you spend all of your money and go bankrupt. It only covers if there are banking failures. So of course, I messaged Wealthfront and asked them, hey, is there any chance I can lose money? So they messaged me back and said, there is zero market risk. So let's say you open up a cash account with them and you like them and they treat you well. You can also invest with them. You can open up a retirement account. So things they offer are your traditional IRAs, Roth IRAs, and your 401k rollovers. They charge a 0.25% advisory fee, which, just so you know, that's about $2.08 a month if you have $10,000 in it. So that's something you're going to want to keep in mind, which actually that's not too bad of a fee. And they also offer a way of saving for college. They offer a college savings account.
529 savings plan.
One feature they are working on right now is offering direct deposit. So you can directly deposit your money from your employer and use it at ATMs via debit card, etc. So this is something I'm pretty excited about in the future. So I've given you all the reasons why I think it's a good option if you're looking for an alternative to your savings, but there are a few drawbacks that I want to go over. Oh, yeah, of course, there's always some kind of fine print. So the first drawback that I can see is if you want to move your money back into your checking from your cash account with Wealthfront, you got to wait 1 to 3 business days. So if you submit it Monday, you won't get your funds clear up till about Thursday. So to me, that's kind of a big deal for somebody who pulls from their savings often. I don't do that, so it's really not that big a deal, but there are people that do that. Another reason why you may not want to use a Wealthfront account is because after your initial deposit, let's say you deposited money in today like I did. So I gotta wait 5 business days before I can even submit to have the money transferred back into my checking. So if I did it this Thursday, it won't be till next Thursday before I can even ask to get my money put back in my checking. So then there's another 1 to 3 business day wait. Something else you're gonna wanna consider when you're thinking about the Wealthfront cash account is there are no brick and mortar banks. So if you feel more comfortable talking to somebody in person about your money, this may not be a good option for you. But you got to remember, that's how they give you that high APY. There are way less costs to running a bank this way. So in case you're wondering, I did a little more research to see how Wealthfront actually makes money. So they do it just about like any other bank. They just make money off your money. So if you're wondering how easy it is to set up this account, it literally took me less than 5 minutes. After punching in a few numbers in my name, I had my account set up in no time. So another cool thing about Wealthfront, the banking isn't just online. They actually give you an app too you can transfer money with and everything else you need to do. So obviously, before I went with Wealthfront, I shopped around online at all the other different options. According to NerdWallet, this is one of the highest yielding cash accounts you can get online. So that's pretty much why I went with them. So there are definitely some more honorable mentions that I feel like I would have to include in this video. All right, the first honorable mention, that would be Betterment. Their APY is 1.78, very close to what Wealthfront offers, but it wasn't 1.82. Number 2 on the list, that would be SoFi, coming in at 1.6%. Again, it isn't 1.82. And I've seen more reviews on Wealthfront than I have SoFi, so that was another reason, but that was the biggest reason, was the 1.6 versus the 1.82. The third honorable mention, which I almost hate to even mention it, but I feel like I have to, is the infamous Robinhood. Yes, we all are aware of Robinhood, or at least millennials are. Robinhood, they started out as a stock trading app, but then last year they came up with this idea of they're going to offer a 3% account. So everybody was all excited, but right when they went to release it, I don't think the FDIC or the insurance, whoever insures it, would allow it. It ended up not working out for them. So I don't know. They are claiming right now they're going to open a 1.8, which is really close to 1.82. And Robinhood may be a bigger company than Wealthfront. I'm not sure. But I just wanted to mention that it's not launched yet. It has not launched yet, but supposedly it's in the makings. I'll put a link in the description if you want to check out all these honorable mentions. But that is the top 3 that I've seen that was comparable. So really, when it's all said and done, the 1.82 will not make you rich, but it will certainly get you richer quicker than 0.09. So something you gotta keep in mind, the rate can also go up. So not too long ago, like I said, it was at 2.51 and it's down right now to 1.82. But not who's to say that in a few months it's up to 3%. And what I would recommend to you is do your own research, see what you're comfortable with. If you're not comfortable with doing anything online like this, don't do it. I think people in my generation are really used to everything being electronic. It doesn't bother me one bit to do all my banking online. In fact, I prefer it. So that's something you want to keep in mind. So now that I went over the benefits of using it as a savings account, so with Wealthfront, you can actually use it to hedge against a cash out refinance. So if you're wondering what a cash out refinance is, that's when you take the equity in your home and you borrow against it by pulling out a lump sum of money. And that's typically the lowest interest rate you can get. So what you could do, I don't know if you want to do this, but what you could do, let's say you're remodeling your house. So you go walk down to the bank. So you say, hey, I need to remodel my house. I need like $100,000. So what they're going to do, they're going to get an appraiser, come to your house, appraise the value of it, and then see how much you owe on your house. And that difference is going to be what's called the equity in your home. The equity in your home allows you to get what's called a secured loan, which is going to be the lowest interest rate you can get on a loan. You're going to be able to pull out a lump sum of money that's about 80% of the equity in your house. So what you could do is take that money, put it in a Wealthfront account. So if you're taking a year to remodel your house with it, that's going to drive that interest rate that you're ultimately paying down. So let's say your cash out refinance rate is 3.82, just to make the math easy. So you pulled out $100,000 at 3.82. So you take it and put that $100,000 in the Wealthfront account, and that kind of hedges against that 3.82. So if you take the difference between the 3.82 and the 1.82, that's only 2%. So you're probably thinking, yeah, why would I want to do that? A reason why you would want to do that, let's say you're taking your time, you're remodeling your house on your own. If you have all that cash sitting in that account, it's really losing you money, especially when you can have it sitting in the Wealthfront account that's hedging against it. And just remember, money isn't everything. The only reason why we pursue money is because of what money can bring us. It can bring us freedom and help us provide for our families. So always keep that in mind. And if you like this content, please subscribe, and I'll see you next time.